and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, a show where we help you understand what's really the buzz on the D Street and what should you be truly tracking. While the stock markets may be ebbing lower over the last couple of sessions and even today, what's on the buzz is clearly the earnings, and specifically we're going to be focusing on CCL Products today. The top management is going to be joining in to detail for us what really went into this strong quarter. You have already seen the stock prices now trading at all-time high levels. The stock has already jumped up 16% in the last two trading sessions, and this is on the back of the strong results that we've got. The net sales for the company in quarter two have gone up by 52% at 738 odd crore rupees, at 1126 odd crore rupees vis-a-vis 738 odd crore rupees that was reported in the September 2024 quarter. Look at the net profit that's now come in at 100 odd crore rupees in September 2025. That's also up by about 36 odd percent from 73.95 crore rupees that was reported in the year ago quarter. EBITDA stands at 198 odd crore rupees. Again, operationally there's a jump of 45 odd percent, and EPS has also increased for the company to 7.5 rupees in the September quarter. Let's welcome the guest on board, Mr. Praveen Jaipuriar, CEO of CCL Products, joining in to detail for us the insight into the quarterly earnings as well as the outlook going forward. Good morning to you. Warm welcome. Thank you so much, Mr. Jaipuriar, for joining in, and congratulations. Strong set coming in there. Help us understand what have been the key drivers for you in Q2.
Thank you for having me here. Yeah, we had a good quarter two this year, largely on account of good volume growth that we achieved this year, and add to it some of the new expansion that we had done on the capacity, especially on the freeze-dried front, that added, and we changed the product mix as well.
Okay.
Which led to, because in freeze-dried, you earn a higher per kilo EBITDA. So that also added to the product mix, and that helped get us very good profits for the quarter as well. So that's been little insight on what's happening. Also, the small pack proportions that we do for our private label manufacturers, there we saw a good increase. The domestic business has been growing very, very handsomely. So that added to the momentum as well. So it's been kind of an all-round performance from all quarters that led to good performance in Q2.
Fantastic. Mr. Jaipuriar, help us understand, was there any impact that you've already seen of the GST rationalization that was brought in September, even though towards the fag end you would have hardly a few days of an input there? But what kind of a response have you already seen, and what kind of a continuation do you see in Q3 and Q4 for that as well?
So GST impact, let's talk on the two fronts. We did see some supply chain disruptions because, the traders and the retailers were a little wary of buying the old stock.
Yes.
And therefore, they delayed the purchases. So that led to certain, sales impact towards the end of the quarter or end of the month. So that was on the, supply side. And on the demand side, we haven't seen, because FMCG products and especially coffee, it's a regular consumption product, and you don't see an immediate spike with these kind of changes. So and we are hoping that the change will be a little more long term, because it won't be a direct impact. The indirect impact would be that the consumers will have a little more money to spend, little more disposable income to spend on these products, and hopefully in the long run there will be a sentiment change and the product categories will pick up. But in the short term, we haven't seen any, not so much of an impact on the consumption front. So yes, a little bit of a challenge on the supply front, but the consumption front yet to be seen if there is an impact in terms of higher offtakes.
Sure. You did mention about the change in the product mix that has really led to contribution of growth in this quarter as well. Has that also resulted in any margin uptick for you?
Yeah, so the product mix largely was on margin uptick. Product growth is because of the fact that we have added new clients. There have been new addition of private label buyers and things like that. But the product mix actually led to better profits, because in freeze dried, which came into which we got commercialized last quarter, the sales have started happening from the freeze dried plant in Vietnam as well, and freeze dried is a higher margin product, so that led to better margins as well.
Okay, so give us an understanding of what is the kind of margin band that you're looking to end the year with because of this change, because we are still looking at the second half. And of course, on the volumes front, also give us a sense of what kind of volume growth did you see this time, and what is the guidance that you would end the year with, sir.
Let's first talk about the volume growth. So quarter two was a good quarter, and we did see a little bit of an upwards of 20% volume growth that we saw. The first quarter was closer to 8 to 10%. So the first half is closer to 15%, and we had given a guidance of 10 to 20%. So we're right in the middle, and we hope to continue with the same kind of volume growth momentum in the coming quarters as well. As far as margins is concerned, the best way to look at our margins, because the top line is also dependent on the coffee prices. So sometimes profit as a percentage of top line could be misleading. So the guidance that we give is that you must track our EBITDA growth, which is the real marker that at what rate the growths are happening. And for EBITDA growth for the year, we had given a guidance of 15 to 20%. It looks like that we will end the year closer to the upper end of the guidance band, which is closer to 20%. So that's the guidance remains more or less same. Yes, there has been a marginal shift in terms of towards the upper end of the bands that we had indicated.
Okay. How did the prices for coffee pan out for you this quarter, sir, and what is the outlook for the second half as well?
So the coffee prices has been very volatile for last 2 3 years, so as to say. In quarter one, Brazil had a very good crop, and the supplies were good. So the coffee prices softened in quarter one, and we were all hoping that it will stay at those levels. But once the crop supply was over for Brazil, the prices again went up in quarter two and remains very volatile right now. So it's a little wait and watch for us, because the Vietnam crops, which is the second largest producer of coffee, is going to come in November, December, and that will determine, because as of now, considering coffee is one of the largest traded commodity in the world, there's a lot of speculative tendencies that creep in. So we'll have to wait and watch. Nobody knows how things will pan out. But yeah, November, December time, we'll get some indication, because Vietnam crop will come in. That will set the tone for the future. So we are also on the wait and watch mode right now.
So, you did also talk about your expansion that you have undertaken. Give us an understanding of, how and by when do you see a peak potential being seen onto the top line because of this expansion, sir?
So, but we just maybe 2 quarters ago, we completed all our expansion, and our expansion was actually doubling the capacity. This was kept in mind the future 3 4 years of growth. What we foresee is now the expansion is over, that is behind our backs, and we are now focusing on how to fill these capacities as fast as possible. But yeah, it will take another 2 3 years for us to kind of get into an optimum, or let's say the peak level capacity utilization. So we are good for next 2 3 years. There won't be any more capacity expansion, and as and when we reach the closer to the optimum level of capacity utilization, that's when we'll decide what will we do for future. But yeah, it will take another 2 3 years for us to get to that optimum level from now.
Okay. How are you looking at the increasing competition in the space that you are in right now? We are, of course, looking at one trigger that there is more and more demand for coffee from urban centers now to even tier 2, tier 3 cities as well. But at the same time, there are a lot of new age startups that are coming into the same space, offering various varieties, of the world, giving a different palate and different taste to the coffee lovers too. How are you looking at tapping that kind of a potential, and what are you looking at in terms of your own brand portfolio going forward?
Yeah, that's a very interesting question. Yes, first and foremost, I don't think so there is a business which doesn't have competition. So we are all good for that, and we believe that healthy competition is good, because it helps to grow the category, and that's what our aim is. That in some of the developing economies, and especially in India, there should be healthy competition, because India is largely a tea drinking country, and the more the competition, the consumers have more choices, and they will end up drinking more and more coffee. So that's good news for us, and because we also kind of feed into the competition. So I don't know how many people are aware of this or not, but a lot of the startups, a lot of the D2C brands, we are actually the suppliers of the coffee. So we drive,
Okay.
and we do a lot of private label in India as well. For the large retail chain. So, we are actually driving the full ecosystem of coffee. Internally we say there is a bit of continental in every cup,
Okay.
and that's been our motto. And at the same time, we are also growing our brand very aggressively. And what we are trying to do is how do we penetrate this category more and more into, as you rightly said, into tier two, tier three towns, so that more and more people can start drinking coffee. So that's been our motto. It's more about driving the category and how do we help people to drive this category more and more, is our motto, because we are a B2B and a B2C player. So and our back end, the supply chain management, our manufacturing setups, our R&D innovation is so strong that we are able to differentiate between one blend and the other. So the blend that I give to a client A is secure. I don't let that blend go to the client B. For client B,
Okay.
I develop different blend. So that way we are able to kind of, maintain that equal, because a lot of people ask that how do you do this? You're supplying to so many D2C brands and you're selling your own brand. So that's one of the, principles that we operate in. Every brand is different, every cup is different, and every product is different. So yeah, so that's been our endeavor.
Okay. What are the key triggers that you will be looking at that could further your growth going forward in the second half, sir?
So yeah, we continue to kind of get more clients. There are certain worldwide we are looking to tap into certain geographies where we went very strong with, geographies like Far East Asia, Western Europe and all that. So we are kind of trying to see if we could geographically expand. That's one leg that we will drive our growth from. The second one is on the fact that we are driving very aggressively private label manufacturing, because we have got a very state of the art plant which can do small packs. So that's something that we are very aggressively soliciting new clients who need small packs. The third is our own brand, which is growing at a very, very healthy pace, and we're gaining market share as we speak. So that's also will be that will also be a growth driver for us in the second half. So there are multiple ways that we are looking to keep the momentum going for the company.
Okay, we've actually seen a very strong growth both on the top line operational front and the bottom line this time around. The big question will it be what exactly is a sustainable growth rate that you're looking at going forward, sir?
So, the sustainable growth rate, and we always say that don't look at our quarter numbers. It may sound a little dampening for all of us, but that's the reality. We are looking for sustainable growth. If you look at CCL's history, we've always guided that 15-20% profit growth is something that we are looking for in the long term. And we continue to remain on that guidance because we want that, growth of sustainable growth coming quarter on quarter. Yes, there are certain quarters which will have a little bit of a higher or a little lower growth. But long term, if you see, that's something that we are committed to.
Okay. Could you also just help us understand, since you're expanding globally and looking at newer markets as well, what is the kind of revenue mix that you have currently between domestic as well as international? And how do you see this mix going forward, sir?
So, if you see the domestic mix, let's say it's around 15% of our total sale. But we really don't look at the mix per se. What we see is that how each of the verticals can be, grown very aggressively, and the mix is an outcome for us. Yeah. So it's not that we are putting a pedal harder than the other. Every vertical is we are looking to grow as aggressively as we can, and whatever the mix outcome is, that's an outcome.
Fantastic. Thank you so much, Mr. Jaipuriar, then for speaking to us on Business Today Television to detail your earnings and the outlook. I wish you all the very best for the upcoming quarters. Looking to catch up with you around the next quarterlies now. Thank you.
Thank you so much.
All right, viewers, we will now decode the earnings and all that is buzzing on the D Street with a market master who's joining in. We have Mr. Arun Kejriwal joining in on the program. Warm welcome to you, sir. Good to have you with us. We were just speaking to the CCL Products management, good earnings and, the all-time high level of the stock price that we have seen. Have you been looking at this stock closely? Do you think it will feature in one of your core suggestions to the clients as well as investors? Are you a big coffee lover?
So, Sakshi, first of all, good morning, and to all your viewers as well. So, as far as an investment is concerned, I do own a very small holding of CCL. I liked this company a good 10, 15 years ago when people were talking whether there is a competitor to Nestle, which was the only coffee in the country at that time. So looking at this company, I had put in some money. The share did not do much in that period of time, and then we had a coffee day happening, and
Yeah.
suddenly this company started getting more recognized because they grew their own coffee. So, yes, I have tracked this company on and off, but I was hearing the CEO speak and it has got me interested to look at it all over again. I have the share, so it makes it easier to track it, and I would comment about it whenever the next time I'm on the show after
Sure.
having looked at the results.
Okay, Arunji, but we're at the fag end of the quarter two earnings. I want to ask you what has really stood out for you in this quarterly earnings? Has there been any sector or any particular set of stocks that you believe are all set for earnings upgrade, green shoots clearly visible, and the uptrend is starting? At the same time, have you also found any red flags that you would like to warn investors about in Q2?
So, Sakshi, unfortunately, there are no clear trends that you can talk of. If at all one were to categorize the results declared so far, and mind you, history says that when you enter the last week of result reporting season, it's typically the bad ones which are left out. Very rarely you get outstanding results coming in the last week of the 6 week reporting season. So the overall picture is not too positive, is not one which you would like to write home about. It's a mixed bag. Some
Okay.
things which stand out really, I think, is Bharti Airtel's result, but the price performance defies logic. After reporting such fantastic numbers, the share is actually down. You can attribute it to the OFS that happened or to any other reason. Fact of the matter is, a large, excellent result declaring company, part of the Nifty 50, probably in the top 10 in terms of weightage, net result share down. Reliance, good results, top market cap or second highest market cap, stock not performing. So underperformance is the highlight. Some good results, no impact. So it doesn't augur well for investors, and it makes your job that much more difficult to link result and price performance.
Okay, got that. So that's as far as the key results are concerned. Let me also just ask you on a few other topics apart from the earnings, and we'll come to some stock specific news as well. IPO rush that continues to buzz on the D streets. Mr. Kejriwal, how are you looking at it? We've had Lenskart, Grow, now Pine Labs has opened today, 3,900 crore rupees IPO has opened. Every day there is either some IPO opening or closing. There's so much of activity there, and seems like the liquidity from the secondary markets is actually going towards the primary market. Looking at the lackluster trade on D Street in the last 1 2 weeks odd, we are also given to understand this again. November month might see huge fundraising via IPOs. It could turn out to be yet another record month for IPO fundraise too. How are you looking at these new age IPOs that are coming in? Physics Wala is coming in again next week. So how are you looking at all of these opportunities, sir?
One word, Sakshi, scary, disturbed, getting alarmed at the way things are happening. It's not that the IPO market is going to shut down. SEBI has not proclaimed that after 31st December you can't fundraise. Why this pent up hurry where everybody wants to launch an IPO right away? There is a fatigue factor clearly in the market. Investors are not getting enthused. Subscription levels seem to be going down. Grow, which had launched their IPO, which had a fairly positive feedback amongst investors, from the price perspective, from the business perspective. The subscription doesn't make you feel that happy looking at what's happening in the marketplace. Listing, we had one listing yesterday, we have one listing today. Uh, None of the analysts who have come on television in recent times said that Orkla or Studs were poor issues. Nobody said that they were extremely overpriced or negative about it. Yet, end of the day result, Orkla closes below the issue price. Studs is struggling today. So, if you were to ask a summary or a opinion on what's happening, merchant bankers and promoters seem to are heading towards killing the IPO market. They have extracted more than enough juice that could be done, and God, God fearing, God willing, if something were to go wrong, we could see a major setback in the IPO market simply because you are killing the golden goose. I'm a little
Okay.
worried with the kind of impact that the market is happening. Physics wala opening. You have another IPO roadshow today, Teneco. So issue after issue, every single day you have one, if not more, issues opening. So it's time to be overcautious, and in a falling market, it is becoming a double whammy.
It's becoming a double whammy. Clearly, a space to look at with the utmost caution at this point in time is what the clear word is. Let's actually try and understand what's happening with the broader markets at this point in the secondary space. Arunji, we are seeing lack of strength for the markets. We attempted at least 3 to 4 times to go above 26,000 and probably retest our erstwhile highs. That did not happen. Every time we attempted that, there was a higher, more severe selling pressure at the top. So much so that in the last 1 week or so, we have now slipped to 25,346, even below 25,350 right now. So we have given up quite a lot of those gains that we had garnered from Diwali up until now. What do you think is the key reason why the markets are lacking the strength here? One portion you did mention that there is a lot of exhaustion that is setting in among investors. What do you think could be the trigger then for the markets to revive spirits?
So, Sakshi, the trade deal with USA is something that is lingering on. We keep on hearing about it. The president of the United States is makes it a regular comment every second, third day. He says the trade deal is happening. My friend Modi, my friend Modi, but there is no concrete result happening on it. We are also getting commentary that the Supreme Court is sort of not quite happy with the way the tariffs have played out. Uh, Debates and hearings are going on. There would be an outcome even from the Supreme Court on this tariff issue sooner than later. On a lighter note, we also hear that FIFA is planning to give Trump a peace award uh, from football as sports and so on and so forth. Very clearly, this peace prize that he did not get from Nobel is becoming a joke that is now being played out, etc. Fact of the matter is, there is no concrete progress. Nothing is being announced. Results not the best that you would have expected after 9 quarters. Uh, Fatigue factor. And while we had a rally some time ago which brought enthusiasm and the probability just around Diwali and prior to that that we could actually make a new lifetime high, we have slipped close to 700-800 points on Nifty from those levels, and it was accompanied by heavy selling by FPIs very clearly. While they did do short covering in that rally, they have doubly sold now in this meltdown that has happened, and therefore the intensity of the sell off looks greater. The last point that I would like to say, Sakshi, is that somewhat 2081, which ended on the 20th of October, was a year where markets did not do much. Uh, Nifty and Sensex gave you a little over 6% annual returns, while the mid cap, small cap were nowhere in the picture. And this segment were the top performers over the last 2, 3 years running. The beginning, we are now close to about 15, 20 days into the new summer, and mid cap, small cap are the laggards in the market, and there is pain. Anybody's portfolio, retail investor is primarily mid cap, small cap. It is red across the Excel sheet. I believe
Absolutely.
there is no glimmer of hope currently in this portfolio that things would improve shortly. So it's going to be a tough, at least first half, if I would say the next 6 months for the mid cap, small cap space. And this is where the bulk of investors that we address, we talk to, are investors.
Okay, so there is no glimmer of hope immediately in the short to medium term that things are likely to drastically improve. But at the same time, for those who have continued their SIPs thinking that they have to continue to be at it and eventually things will improve, for them, what's your advice? For those who may be looking at an opportunity to invest maybe lump sum in this market, what should they be doing now?
So, very important questions. And what we need to understand, first thing, don't panic. It's not the end of the world. It's not that mid cap, small cap will not perform ever. It's just that the valuations which had become stretched when the rally happened is now getting corrected. But at the same time, don't jump in and make large investments because you're getting shares 40%, 50% cheaper. Wait, get that small uptick that happens which looks sustainable before you jump in. Preserve your cash. If you have the cash on hand, you will always get an opportunity to reinvest. Uh, whether the uh, trade deal happens or not, I believe it could happen at the end of next week once Bihar election results are also out. You could see a lot of positivity coming back to the market, but not enough which could suddenly see a flurry and be heading towards a new high right away. So it's like tough times in the short term. Probably the full impact of what is going to happen in the next 2 months would be seen when December results come out. Two important events would have happened by then. Whatever is to happen on trade deal would be done and dusted. Second, the full impact of GST, leaving aside the lump sum jump that we saw in the last week of September and October, would also be away, and we would be back to normal. So all these factors would start playing when December numbers are announced, and that would give you a much better picture
Sure.
of these mid cap, small cap stocks, which in any case is our market.
Fantastic. Arunji, it's always a pleasure to host you with us and seek such experienced insights that you always share with our viewers. Of course, we'll get you back on another edition very soon and hope you have a fantastic time until then.
Thank you, Sakshi, and thank all the viewers. Thank
Thank
you.
you so much for being with us. 10:28. Let's quickly start wrapping up this show as well. 165 points of a loss on the Nifty viewers. 25,345. So we have slipped below that 25,350 mark that we'd marked out for you in our morning show. That is going to be critical to watch out for. It's been a choppy ride. Let's see whether there is any sign of a pickup from these lower levels in the markets throughout the course of the session. Sensex has fallen by over 600 points as well. All the sectors are down in the red at this point. Oil and gas, FMCG, IT is the top laggard in trade right now down by by over 1%, real estate down by over 1%. You're looking at infra stocks that are down by 1%. PSU banks also nearly down by 1%. This is despite the fact that there is a lot of hope that the merger process is going to start forward, and the government has also indicated the same. Auto space, broader markets, all of them are down in the red. Everything, it's a sea of red in trade among sectors. Stocks, handful that are still hovering higher on the Nifty. Adani Enterprises, ICICI Bank, Shriram Finance, HDFC Life, Bajaj Finance, Sun Pharma, Power Grid. These are all the stocks that are hovering higher in trade. On the downside, IT names, HCL Tech, Wipro, Tech Mahindra, TCS, they are forming a large part of names that are among the laggards. Bharti Airtel, State Bank of India also among the laggards at this point in time. Let me also highlight for you the key stocks that are losing ground as far as the broad index is concerned. Amber Enterprises post earnings now down by 9.5%. ADADG stocks like Reliance Infra 5% lower. Ace Constructions about Action Construction 4.4% lower. Latent View Analytics 4% lower in trade. But on the winning side, you have Aarti Industries post earnings 6.5 to 7% higher. Gujarat Pipavav 5.8% higher. Shipping Corporation of India 5% higher. L&T Finance Holdings also among the top gainers in trade. All right, viewers, we'll leave you at that front, and of course continue to track the markets for you on Business Today television. So don't go out anywhere. Of course, in case you have questions about the stocks in your portfolio, you have a chance to ask them to top market experts at 12 noon on daily calls. I'll be back for that. Hello and welcome. You're watching Business Today television. I'm Sakshi Batra, and this